Right, guys, so, basically, still one or two struggling, but I want to point out, Mickey, I know you were um, still trying to reverse, all right? So I'm going to make this video, and it's going to be go with the flow, but we're going to use buy stops, sell stops. Maybe this is the way to go for you, Mickey, because, Stephanie's had quite a bit of success with this. Um, it's not you're going to have to work on a stop loss system, um, Mickey. Whether it's um, you just stick to the trade and say, well, it's a 30 pip stop loss, um, or whether you're going to use the Rencos for in and out. It's entirely up to you. But basically, what I'm going to show you again today. This was Friday's session, right? This here was opening bell. Okay, so basically you had your rule 2 in here, you closed above both the 5-minute EMAs, as you can quite clearly see. Okay, then you had to pull back. So what Stephanie has been doing, Mickey, is placing a buy stop just above this orange line here. You see this orange line there? Right, once she knows the direction. So basically she's looked at direction here as up and put a buy stop above the 5-minute orange line here. Okay, and then she's in, and I think she took 75 pips there. Right, again, Mickey, right? So what I'm going to do, Mickey, is give you a challenge of, say, taking no more than 3 trades doing this. If you do this, what you should do is have a stop loss of 30 and a take profit of 60 minimum, right? I'd go with that because that's a 2 to 1 R&R, Mickey. So if you win 2 of your trades, lose 1 of your three trades in the day, you're still well up. Okay, and at the end of the day, that's what it's all about, mate. So again, you would have had the one there, comes back in here. This is what you need to do, Mickey. You need to follow, but wait with your buy stop or your sell stop ready. Make sure price is back in here. Okay, so yes, you would have been in somewhere there, and the problem now, Mickey, is do you let this happen against you here, or do you say to yourself, right, okay, I'll give myself to break even, because you would have caught it when it was going up, Mickey. All right, and I can't. In fact, we'll have a look at. Let's see um, how that candle actually panned out. Right, so 15. I'm going to see exactly how that candle panned out. 15 is somewhere here. Right, so it came down. Okay, so this was the move up here. Then at 15, yeah, this move here. You see, so I'm not sure if you were following down here, following this, and you would have set your buy stop there as that went up. Would it have been this one or this one? It says 15, that candle, so it would have been this here. Okay, so I'm not sure exactly where that, let's see if I can work out the price of where that actually, oops, get off. Ooh, don't move. Oh, you would do that, wouldn't you? Yeah, that's it. What price you would have got in that there? 32, 30, 31. It would have been on 32. It would have been on this candle here. That candle there, where you would have been triggering. Okay, with the buy stop just above the 5-minute orange line there. Okay, Mickey. So what I'm saying, Mickey, is now, right, you didn't get your 60 pips here when here. Okay, but do you let this come down and lose 30? Or do you say to yourself, right, you know what? Okay, it had a go at it there. 2 red candles, and I'll get out on that one. Or do you say, I'll give it to break even, in which case, right, if you follow that line across there, you would have been going out there. Do you know what I mean, Mickey? You don't let it come down and lose for 30, because once it's been going up and you didn't get your 60, you just say to yourself, it's either break even or I'm out on the second red Renko candle. That's because you're still going with the flow, Mickey, no matter what, right? You go with the flow. All right, now this means if you're ignoring the blues, right? So if you just keep going with the flow, um, you'd have won. I think it's this one here. Let's go and look at the time on this one. So you'd have been getting in at 269 on the 40 candle. Yep, so 269. So look, 5365. So you'd have been getting in on that candle there, like that. Okay, you see, that one would have won for 60 pips, Mickey. Okay, this one, you could have either, said 2 red candles and I'm out, right? Or break even. All right, but then again, you set your buy stop. You're back in again here, right? So while this is coming down here, it closed here, which means it closed below. You can see there, that's the close. Your buy stop was then set just above 5-minute orange line. Okay, again, we'll work out exactly when the time was. Excuse me, 15.10 this candle, and the price you would have probably got in up there was 42, so 15.10, 42, so 15.11. So this candle here, what price did we say? 42. Oh, that's 15.7, isn't it? 15.11, 42. That candle there, right? The fourth one up, 2, 3. So again, you would have been getting in there, Mickey. You'd have done the same as what you did on this previous trade here, and either said, right, okay, 2 candles out, or break even. Okay, so even though you've got like a 30 pip stop loss, which means you've got 10, 20, your stop loss was probably somewhere down there. Okay, even though your stop loss was down here, once it starts going up like this, Mickey, just bring it in to break even. Okay, so your stop loss then would have been here. Do you understand? I think this is the best way to do it, just to say to yourself, right, I'm in, I'll give it a break-even stop loss, because this can happen where, you get 2 against you and then it goes and wins. All right, Mickey, so this is what I would do. I would, as soon as it starts going up, I would bring stop loss in to break even. So that wouldn't be a worry there. Do you understand? So you leave it then to win. Okay, and again, you would have won your 60 pipper on that one. Okay, do you see what I'm saying here, Mickey? So you've had 3 attempts and you've not even traded. You've not judged when to get in, Mickey. What you've done is you've just put a buy stop here above the 5-minute orange line, here above the 5-minute orange line. That trade there was a break even. Here above the 5-minute orange line, that trade won. So you've won that one and this one so far. So again, you wait for the next time, back in amongst these EMAs, right? Again, and this is a slower market. Sometimes, Mickey, you're gonna have to be really patient and say to yourself, you know what, it's got to be back in the 5 EMAs. And you've seen how volatile it is. Sometimes you might miss the quite a few trades because it is that volatile, right? What I would suggest, when it's volatile, go for bigger TPs. Set yourself a 100 pip TP. Do you understand? You'll get a bigger, And then when it slowed down, it might be an after session, right, that you decide to have another go at it, right? And if it's an after session, fine. You know, it works in after session again here. This one was back in. It looks as though it started to go up here. So 1530, where are you? 1530 would have been here. You see it here? Right, so what was the price? You probably... Well, it didn't go above. Sorry, what am I looking at? It's this one here, isn't it? Yep. Just, it might not trigger your buy stop there, because it would have been something like that. You see, so it might not have come up and triggered your buy stop. All right, so I think, yeah, judging by that there, you'd be fine. Okay, so if that was your buy stop, right, and it didn't come down, you might have had to lift it a little bit there. Okay, because you would have been just below probably that line there. No, you thinking about it, Mickey, the line would have come across here, right, because of the down move. So that's pretty much where your stop would have been anyway. All right, but let's just say it was a bit higher up, just for the trade sakes. Right, so it was there. Okay, so you triggered your buy stop again. Again, let's just have a look at the time on this one. Let's say 35 and 400. 35 somewhere here. 31, 31, 31, 31, 33, 35 and 400 we said, didn't we? 400, 393. So on that candle there, the third one up. So that's where your trade would have triggered. This time, again, it's up here. When it gets to about here, Mickey, bring your stop loss in from 10, 20, 30. Would have been probably there. Bring your stop loss into there. Okay, because it's break even. You can't lose then. All right. And again, Mickey, you would have won that trade there for 60. You understand, mate? So basically, I think this is what Stephanie did, okay, on Friday, right? But this is because it's slower. It was a slower period. All right, this one here, you know, might have triggered somewhere there, but then it starts coming down, right? Once it's been up, if it's not one for 60, it'll start coming down. You would have been break even on that trade. You would have been break even on that trade, but you would have won 60, 60, and 60. All right, Mickey, and all you've got to do, mate, is you've got to say to yourself, I just go with the flow, okay, until I lose. And the thing is with losing now, Mickey, if you do it this way, okay, you're not going to lose much. You might, you know, sometimes you might get a 10 pip loss because it spikes down pretty quick. Okay, but you're not going to lose 30, 40 pips every time. What you're going to have to do, Mickey, is force yourself to go with the flow. Okay? Now, you're going to have to force yourself to go with the flow. All right? Once your trade's been triggered, mate, all you're doing once your trade's been triggered there, right, is looking up here. Right? You're just looking for your exit now, Mickey. It's either a 60 pip win or a break even. Like I say, with that one there you were in on, that candle, it didn't go a pip against you before it went like that. Okay, some will do like that one did there. Was it this one? This one here, wasn't it? And come back against you. Fine. If you've got the break even, stop loss. Oops, get a straight line on this. That'll do. Right. You wouldn't have lost anything. Do you understand, Mickey? So I think that's what you've got to do, because you seem a bit lost. The same with you, Hans. Right? You know, work on this. Just go with the flow. And even now, your losses can be break even. Okay. Now that all relied on this particular market with price coming back into the 5 EMAs. Okay, right. There are days when it's different. Let's have a look. Again, this was messy, but 1:21:30, 2:30. Oh, this is AM, innit? Sorry, guys. Yeah, that, I think, yeah, here we go. This was either the day before, yeah, 12, Thursday. But again, you had it here as well. I think I'll show this one. So we're looking at this here. Yeah. Yeah, I think this was that period. Again, so this had happened here. Opening bell. Okay. Falls back. Right. Because these lines have a what do you call it? Because it's more volatile. These lines now, I don't really think you should be waiting for it to move and putting your buy stop there, your sell stop there, guys, because that is like huge move there. Okay, so I would advise in this situation where it was just turning, it'd been open and down like that, I would advise, and you're getting these big spikes, right, I would advise using both the lines. So you probably had one winning there. Again, here you'd be like this, it'd be under this line. So in other words, while it's going up there, you put following it up so many pips. Understand? It might be that you follow price by like 30 pips. So what do I mean by that? Just let me clear that off and I'll show you. So because big move there, this move here. This is another way of doing it, Mickey. You can follow price and use the sell stops, the buy stops on the Renko time frame. Okay, so again, your direction is down. This close below, your direction is down. So once it was going up here, which is this move here, okay, you could be following price, all right, with your sell stop. So while that candle there was forming, you should have your sell stop on this candle here. Do you understand? So you're always at least 2 full blocks behind. That one was forming here. Then when this happened, that's not moved. Okay, but then when it goes up another block here, you move it up again to there. Okay, when that one was forming. So in other words, you're just 2 full candles plus the forming candle behind. And all you're doing is you're following it. Right, so what would have happened here? Right, 2 full there. You would have been in the trade. You would have been here by the time that candle closed. This candle closes, you would have been here, there. Okay, so what you can do then is when that closed, right, is just leave your stop loss, your sell stop exactly where it was. So when that come down, again there, Mickey, right, hands, it triggers your trade here. Okay, gets 30 pips up, bring your stop loss to break even there, and let the trade run. Okay, so you'd have been like 10, 20, 30, 40, 50 pip there before it did this against you. Do you understand? So, if you were saying, right, well, 50 pips is enough, that'd have been your first one there, which was this trade. Okay, and again, if we look at where you would have got in here, the price is about 60. Let's have a look at this one. 78, 64, 58. So it had been pretty much right on the yellow line. Excuse me, when you entered that trade, doing it this way. I think this is probably the better way. If you can just, once you've got your direction, Mickey, Hans, guys, Magnus, everybody, right? Once you've got your direction, it's just a matter then of saying to yourself, right, how do I enter the trade? And if you are unsure about the entries, the exits, right, then use the Renkos because it's really clear. You could have been, like I say, following it up and then just stopped. Okay? You break even. So you would, have won 60 pips on that candle, I think, there, if you'd have just left it. Alright, but this was this move then. Here. Okay, so again, we'll look at this, right? What time is that candle? 1440, somewhere here. Yeah, there you go. This move here. So 1440, what was the price? Let's just say you put sell stop here, right? Okay, you know what? We're using these as sell stop markers, right? So again, you've just taken 50 on that one, all right, but you do exactly the same here. While it's going up, you follow it. Okay, stay 2 full candles behind. See it here? 2 full candles. That one closes. That there is where your stop loss would be. Your sell stop would be. Okay, so when it comes down, it's triggered on that candle. 1, 2, 3, 4, 5, 6. You've won your trade again. So that one there, you won. That one you might have taken 50. If you're going to go for 50s or 60s, it's entirely up to you guys, right? So at the moment you're looking at that there and you've 2-0. But again, guys, this is what you need to do. Once you get like 30 pips up, 20, 30 pips up, right? You'll see BT say he says protected trade. So basically what he's done is he's moved his stop loss either into profit or to break even, and that's what you need to do, because if it spikes up again, then you lose nothing. You understand? Okay, so at the moment, guys, when you're looking at this, you're probably 2-0. All right, 2 winners. Right, and again, we will just have a look at the next one, which was this one. It didn't come back into the 5-minute. This is what I'm talking about when I'm saying, guys, when it's volatile, it doesn't always come back in here, right? And it'll probably go from the EMA on the HA charts. But imagine, right, you just won that trade down there, and you've got your next sell stop ready, okay, and you're following price up here again, okay, you'd be in there, okay. So if I just work out where this is now, 49. That's way off, that one. 49. Yeah, she's, you're halfway down the candle when you get in on the 5-minute time frame. But if you use this system where 2 full candles, right, and then that one's forming, when that one's forming, you might be following it a bit more. It's entirely up to you guys to try and get an even earlier entry, right? But let's say you got in there again, guys, 10, 20, 30 up, bring your stop loss in to protect it, okay, and eventually another winner there. This is all you have to do, Mickey, right? You go in with the flow, right? Hands, you go in with the flow, and you're doing it this way, right? Let's have a look at this one here. Okay, so what time was this? 50, 50, 50, 50. It's got to be up here somewhere. 52, it might be this one, yeah. Right, so yeah, this one. This one might be one where you lose. Right, but what I would do here is, if it's triggered your trade there, okay, and it's gone up here like that, just get out, right? So that might be one where you just lost 20 pips. I wouldn't let it lose to 30. You just said, no, because it's green there, okay? But then you'd be having to go at this one again. Sell stop here. See it there, right? 20, 30 pips up on that one there. Bring your sell stop into break even. Bang. These two candles never went anywhere near your sell stop at break even. Not bothered because you wouldn't have lost anything anyway, right? They never went anywhere near. Just remove. Ooh. Just remove them two a minute because your sell stop would have been there. Yeah, okay. Never went near. You would have won that one, as I said there. Okay, Mickey. So that one, you might have lost 20 pips on because of where the entry was. All right. That one, you would have won again for 60. All right. Do you understand, Mickey? This, I think, if you use the Renko with the buy and sell stops, right, you'll get better and better at your entries. And like I say, you might even see this one form in here and bring this to there, so your entry might even be 20 pips after the move, in which case you'll win a lot quicker. Okay, so that is kind of what I'm saying now. The two ways to do it: you can use the 5-minute time frame, but again, as I've already pointed out, in the volatile period, right, they don't always come back in here, right? Or you can use the Renko charts, just following price up, okay, or following price down, whichever way it is. All right. Let's have a look at another day, because every day is different, guys. You know, sometimes we get nice strong trends like this. Remember that reversal? But again, look what you had here. This was opening session, you know, and you see how it's nowhere near the 5 EMAs. This is why using the Renko time frames would be good. Okay. After that period of craziness, well, what happened in after session? You know, you got above here. I think Stephanie won big on one of these, maybe a little early on the entry on one of them, but I think Stephanie come home and had won 137 pips on one trade. But this is what happens when it slows down. It comes back into the EMAs, right? So, you know, you'd be using your buy stops on the 5-minute time frame if you wanted to. Like even this one here, you know, comes above it, triggers it, comes down a bit here. If it doesn't take you out, then it would have won. Do you understand? And then you might be thinking again here, another one here, winner. You know, this one comes back in here, winner, back in here, buy stop. I'm not sure about that one. You know, either way, but again, Mickey, it's go with the flow, mate. Recognize what the market's telling you. Use you know, buy and sell stocks, because basically what they're doing, because they're taking away you know, the entry problem that a lot of you have. Oh, I'm not sure, and yeah, this was another one where it had come down big from 4-hour BB band earlier on, but again, you know, this is after session as well, down and then up, and look at all these you would have had. Okay, kind of what I'm saying, Mickey, is just try and get yourself 3 trades a day doing this. I mean, you look here, this was opening bell. Okay, back to it. You've got a sell stop down here somewhere. There. Triggers on that candle there. Winner. Okay, here. Not quite in, but you know, if you're using the Renkos, you might have had that one. All right. And then obviously went up a bit. Probably, you know, maybe that flip down baby band, you might have seen that. Again, Mickey, if you're looking at taking 3 trades a day, 50, to 180 pips is more than enough. And again, you know, no matter what I show you on the Renko charts, if you look at it, Mickey, look at all these ups here, right? And if you'd have done on this day what I've been saying to you, you know, like buy, get in 2, maybe 3 candles. I would go try and get the 2. I mean, from a BB band here, right? At the worst, I would be on that candle there, you know, because it's off the flipped up BB band. That one. This one wasn't far off it, but again, if I was using a buy stop, probably on that there. Winner, maybe on that one again there. Winner, this one here, off the back of the doodah. Winner, following it, prices, buy stop somewhere here. Winner, you understand, Mickey? Hans, it's just, you've got to just go with the flow with them and keep using the, if you use the buy stop, it's because what will happen is you see this period here, there, on the BB band, and you'll start seeing that candle there turning green, and then all of a sudden it goes red again. Right, so you'd have dived in when you've seen it turning green, okay, and lost. This is why I'm saying if you use a buy stop now, right, onto that, you'd have been following that down by 20 pips, and that's where, you know, your buy stop entry would have been. So it'd have kept you out, okay, unless one of these two, unless that candle there turned green, went up there and became green. Do you understand? So this is why maybe using the buy stop and the sell stops is better, even if you like 2 candles behind like that. Do you understand? 2 solid green candles, you know, because again, look at it this way, right? You had this here, you got in there, right? It went up and then it went down like that. You're out on that candle, right? You just say to yourself, no, I'm out. Okay, but then you'd have been back in here, right? 10-20, no, it's not gone up enough yet. It's not touched your stop loss, which is down here at the moment. Okay, goes up here to somewhere there. You bring that stop loss in to break even. There's your stop loss, somewhere there like that. 10, 20, 30, 40. That's 50 pip there. If you didn't take it out there, it didn't take you out here because you break even stop loss, and eventually you trade one on this candle there for 60 pips. But you know, if you're going for 50, it would have already won on that candle there. So you know, maybe try that. Try 50. Get yourself some 50 pippers. All right. So you understand, guys, what I'm saying about you. It's just go with the flow, and excuse me, but don't let it go. It'll be very rare, guys, that you'll lose the full 30 pips on this. You know, very rare. Okay, and all you've done is it's go with the flow. You're ignoring the blues, right, until it closes below the 5-minute orange line, and then you say to yourself, or above, like, so there would have been blues here. You understand? 15 blue, maybe a 1 hour blue, right? 1 hour blue, bit different to 15 blue, but 15 blue, let's say, okay? You would have taken that and won. You'd have taken that and not lost anything, because that's come down enough here, right, that when it started going back up, you either had a break even stop loss, or you decided, no, I'm getting out. Okay? But when that candle happened, you don't take this one down. Okay? You don't take this one down. If anything, you should have thinking buy stop just above that when it was coming down here. Okay? And I know it spiked down a bit here, so you probably had to get out. But again, you probably wouldn't have lost anything because it went up a bit to start with. Okay, if it didn't take you out, then it won here. There. You understand, guys? So that's all you do, Mickey. Hands. You could have taken that because, you know, the blues were probably in when these candles were still going down. You know, the 15 blue, I should say, was probably in when these were going down. Okay, so all you have to do is say, right, you know what? I just keep going with the flow. So even if you'd attempted that one, you'd got out. When that happened, you stop taking it down. And then you decide what to do. Do I wait now for it to close above the 5 minute, the 5 minute yellow, or do I just stop taking the trades down? Do you understand? You know, you could have even taken that down, but what would have happened? Look, you know, again, down here, this one here, look, down, because it come back below the 5 minute orange line there. So definitely either that one or that trade there, again, because it come back below, closed back below the the 5 minute orange line. Okay, so right, let's just go and have a look at a few recordings. I just want to show you guys, because I know some days are messy. You know, when the 5 minute yellows are there, when the 15 blues are there, when there's loads of them. In particular, when you start seeing Renko yellows and HA yellows, guys, that's when it's ranging. When you see a lot of HA yellows, it's ranging, right? And you could even just, you know, take them for 50 pips or what have you. Okay, so I'll just have a look at a couple then. A couple of recordings. Again, you know, look at the yellows, right? Because it's a rangy mess. Do you understand, guys? You just say to yourself, right, well, okay, then I'll just take the HA yellows or the Renko yellows, right? And you could do the same thing, guys. You know, if I just get a line here, right? You'd seen the Renko yellow there. Buy stop. You understand? That's how you have to do. You've seen the Renko yellow there. Sell stop. Okay, that's how you have to do. And you look at it and you say, well, there's a 15 blue and a Renko yellow. Okay, there's a 5 minute yellow, 15 blue, Renko yellow. Right, buy stop, just in case it continues to go down. That way you don't have to decide when to get in with that Renko yellow. You just let the platform do the work for you. Okay, you would have won that. You would have won that. Okay. Right, so what time are we? Yeah, it's way after Doodar as well. I mean, he's probably going into after session a bit now as well. Just flicking through, guys, having a look. I know sometimes the Renko yellows are light, so you know it might be that you just say, oh, right, I'm not trading, it's messy. I mean, if you're looking at the two here, then the clearer one is obviously the Nasdaq. You know, and again, you might have had a go at this one down here because it's 5 minute orange line. You see it? I think, is it that one or is it this one here? Might be that one there. Alright, which would be probably them there, like that. Yeah, could have been a pain though. We're going up a bit, couple here. The Renko's a bit, the Nasdaq's a bit different, right, guys? In after session, it slows down, and the 10 pip candles become are not easy to trade. Okay, I mean, what am I saying? Well, this moved down from the 5 minute orange line here. That's this. It's only gone like 30 pips. Do you understand? Sometimes it might be worthwhile putting your own on 5 pips, right? Because if it did that at 30 pips, it'd be down here. So you'd be going in there, and you'd have something like that one in. Okay? It's just the way it is, guys, you know. Again, here, if you had sell stop somewhere there, because you fancied it down somewhere there, like that. Look at this. You'd have been there 10, 20, 30, 40. It's a 50 pip move already. That there. This is, like I say, going to be pushing into after session soon as well. Yeah, and again, look at this. You know, guys, you closed above the 5 yellow, 5 orange and the 5 yellow, pull back, and then it was up. Alright, you understand? Just one other thing and all. Generally, the push through candles on the 15-minute orange line and the 1 hour orange line, right, they tend to go big. What am I doing here? Right, they tend to go big. It's like one big push through, and as you can see here, this one, this one there, and look at this one here, go big. And when these are the ones where you can, if you want, hold out for a bit more. Again, not so sure you should have been taking that, right? But the point is, if you'd have had a buy stop on it, nice trade. Okay, this one again here, buy stop there, nice trade. It's just another way, guys, using the buy stops and the sell stops as another way of entering the trade. If you're not sure, you let the platform do the work for you. You let the platform decide when you're going to enter the trade, okay, and it'll take a bit of the pressure away from you. Yeah, shouldn't really use that one because we're well after session, well into after session. Anyway, one more. Look at the 23rd day. Again, look, you know, this was one of them days where it was low volume. You can always tell low volume days, guys, right? Because they tend to come deeper, the pullbacks. You know, look, they're coming in here. But imagine if you were just saying to yourself, well, instead of having to work out when to get in, right, you were saying, okay, then it's got to be above the 5-minute yellow line, right? So you probably triggered a trade there. Yes, this one might have come back against you a bit there, but then eventually that again, one there above the orange line, that, okay, this one here above the orange line, yeah, would have had to get out there, but then again, there, and another bingo. Okay, some of you might decide to do it on the 15-minute time frame, and you'll get less trades, but you'll get bigger ones. There, look at that one, bang. Okay, another one after it there, bang. Another one here, look, that one, bang. There, bang. There, bang. Do you understand, guys? Again, you look at the NAS there. This one, you'd have been in there when it's going up. And if you notice, the reason these are good is because your trade doesn't trigger unless it's going up or down, you know. If you're saying down, obviously. Do you understand? It's like this one here, if you look on the UCAD there, if you're putting a sell stop in somewhere there, trade didn't trigger until it went down, which means on this particular trade here, it never went a pip against you. It just went straight into profit and stayed in profit as it did with the Dow and the other, you know, on that particular day. Quick look. You know, here, look at this one. You had a buy stop there. It might be the way for those of you that only want 2, 3 trades a day. It might be the way to go is to use the 15-minute time frame. You know, imagine this particular day on the NAS, 1, 2, 3, maybe 4 trades there where they all won and it didn't go a pip against you. Understand? Yeah, this one here. but you had time to bail if it hadn't won on that candle there. Okay, so it might be the way for some of you to actually trade if you want 2 or 3. Just bear in mind, guys, that, you know, of old, it used to be Igor's first entry, the 15-minute orange line, and then he would add to that. He's adapted a bit now, but that used to be his original first entry, and then so he'd be going in here on his first entry on this one, and then he might have another entry somewhere up here when it's pulled back on the HA chart, but his initial entry would be the 15-minute orange line. So, you know, food for thought there, guys. All right. Quickly. Yeah, again, you see this one here now. You know, look, it's the 5-minute yellow there, look. See it? It's a 15-minute orange line, so you can see it's just going up. Look, with the momentum here now. Right? There, you'd be in this trade somewhere there like that now. You understand, guys? So in effect, you would be in like that at the base of that 18, 30 odd. You're already 30 odd. So now what you do is you bring your stop loss in to break even. So you just can't lose on that trade then. Okay, let's have a quick flick on for more. Right, then it turns. Okay, you start doing it the other way. So another thing that some of you might do is say, right, well, you know what, I'm going to do a buy stop with every signal. Do you understand? You might do a buy stop or a sell stop with every signal, because 5-minute yellow there, sell stop, down, won something there. Okay, 5-minute yellow here, buy stop, won something to there. Okay, it might be 15-minute signal, it might be HA signal, or buy stop it, see what happens. It's there, guys, for you if you want it. Right, if you're not sure of the entry, use buy stops, sell stops. Okay, we'll just flick on. That's the one problem with, you know, using the doodads. I am all about go with the flow, guys. You know this. Once I've got my flow, it's get as much out of it as I can. You know, but again, if you still fancied up on this, imagine if you just had a buy stop above the 15-minute orange line, which would have been somewhere. Ooh, that's the 5-minute time frame, but it would have been somewhere there like that. You know, because that line's bent now because it's gone up, but it would have been somewhere there like that. Yeah. You can do it on any time frame. You could do it on the LTs. You know, it might be a daily, and you think, right, well, I'll just put buy stuff above the daily orange line. It might be 4 hour. Oh, I'll just put it above the 4 hour orange line. Okay, as I say, you only need a few trades a day. You don't need a gazillion trades. All right, you just need a few, and then lot size. Okay, guys. So yeah, that is another way of doing it, and I've had to do this because, you know, Mickey and one or two others are still trying to trade against the flow, and the thing is, Mickey, if it's in your mindset now, if you look at any time when these things happen, generally we'll get to it here. Where are we? If your mindset is up, okay, because of that 5-minute candle there, then you're gonna have your stops ready. You understand? So when it was coming down on this candle here, you're following it, and your mindset is that it's going up. Okay, it's going to stop you having to think about the blues, and you just take it, bang, winner, back in here, just above there. Look at this one, Mickey. Do you understand, mate? And your mindset, no matter what, there's definitely blues down here at this period, right? But your mindset because you hadn't closed below here, you still got a buy stop ready. So, you know, even though that might have struggled, it wouldn't have cost you anything if you used the break even stop loss. All right, mate. And again, you know, a key closed above here. Look at this one. Buy stop them there. Look at that. Wow. You know, this one here is coming back down. You're following it down. You buy stop. Another nice trade. Okay. So, Mickey, Hans, guys, you know, that is just another way you can use your platform to make the decisions for you. So you're not having to work out when to get in, okay? Because I know some of you struggle. Oh, I don't know whether to use momentum. I don't know whether to use HA yellows, Renko yellows, or whatever. Well, if you're using buy stops, you know, and I mean, personally, that is probably the latest I get into these trades. You know, a full green candle. If you look at this here, a full green candle is usually my entry there, like that. You know, again, you would have had a full green candle here, so that's kind of my entry there, like that. Okay, full green candle there. Okay, might have. It depends. Sometimes I tend to let them run, right, because I think, yeah, let's go with the flow, right. But you know, you could have said, right, okay then, you know, I'll lose 10 on that at the most, and that would have been where you got out. Okay, again, full green candle in there. All right, went up 10, 20, 30, get 30 pips up, break even, you take your stop loss, and then you're out for a loss of nothing. Right, there you're in again there. That one. Okay, do you understand, guys? It's not a hard thing to do, but you've just got to go with the flow. Ignore the blues until you close below or above the 5-minute orange lines, and then you can make up your mind, right? Is the trend or the buyers strong enough to continue, or is it one of them days where it's going to reverse? All right, and obviously, as I say, you know, once you start the reversing process, you've seen what a couple of days this week were like. One in particular, I think it was the Wednesday. This one here, you know, look at it. That was the reversal, and it followed the system closed above here, and then closed above the yellow. Okay, and then after that bounce down there, look at it, boom, all the way, all them pips there. It was I think eventually it turned out to be an 800 pip reversal, guys. So, you know, all right, hands out, Mickey, guys. If you can't, as I say, if you're struggling using the direct entry, then use buy stops, sell stops. Let the system, let your platform enter the trade. Okay, but then you just adapt your stop loss system so that you lose as little as possible. And as I've shown you today, if you'd have done it, you know, if you'd have taken this particular trade here on this candle, the close of that candle there, right, it went up 20, then it come down 30, right? So what you do is you just say, right, I'll let it go 10 pips against me, no more. Do you understand? Right, if you'd have got on that candle there, 10, 20, 30, when it's 30 pips up, bring your stop loss into break even. Okay, so you would have been out there and save yourself 20 pips. Do you understand? Then you're in again here. That one, 50 pips there. Okay, so you were probably lost one for 10, lost one for nothing, so that's 0-2. Then you won that one in this period here, right, for 50. You were 1 win, 2 losses for 40 pips. Understand that? That's the way to do it, guys. So it will stop you panicking about how much you're going to lose. All right, guys.